This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Germany faces certain recession if already faltering Russian gas supplies stop completely, an industry body warned on Tuesday, as Italy said it would consider offering financial backing to help companies refill gas storage to avoid a deeper crisis in winter. European Union states from the Baltic Sea in the north to the Adriatic in the south have outlined measures to cope with a supply crisis after Russia's invasion of Ukraine put energy at the heart of an economic battle between Moscow and the West. The EU relied on Russia for as much as 40% of its gas needs before the war, rising to 55% for Germany, leaving a huge gap to fill in an already tight global gas market. Some countries have temporarily reversed plans to shut coal power plants in response.
China could face further power shortages this summer despite taking drastic measures to boost coal production, as much of the new supply is of lower quality than before and burns more quickly in power stations, traders and analysts told Reuters. The world's top coal consumer relies on coal for 60% of its electricity. Last year, lower domestic coal production led to a weeks-long power crunch that hit manufacturing across the world's number 2 economy. Beijing has since ordered a ramp-up in coal output to record levels, and capped coal prices to ensure they are affordable for power generators.
Moving on to the top news in the energy sector.
Germany's government will not agree to European Union plans to effectively ban the sale of new cars with combustion engines from 2035, Finance Minister Christian Lindner said on Tuesday. In its bid to cut planet-warming emissions by 55% by 2030 from 1990 levels, the European Commission has proposed a 100% reduction in CO2 emissions from new cars by 2035. That means it would be impossible to sell combustion engine cars from then. European Parliament lawmakers backed the proposals this month, before negotiations with EU countries on the final law take place.
Oil rose $2 per barrel on Tuesday on high summer fuel demand while supplies remain tight because of sanctions on Russian oil after its invasion of Ukraine. Brent crude rose $2.06, or 1.8%, to $116.08 a barrel by 10:40 a.m. Eastern Time, 14:40 GMT. The U.S. West Texas Intermediate (WTI) crude contract for July, which expires later on Tuesday, rose $1.72, or 1.5%, to $111.28. The more active August contract was up $2.17 at $110.16. UBS analyst Giovanni Stornovo said that despite concerns over economic growth, latest data on flight activity and mobility on U.S. roads continues to show solid oil demand.
Next, we have the top news in metal markets.
European Union leaders aim to maintain pressure on Russia at their summit this week by committing to further work on sanctions, a draft document showed, with gold among assets that may be targeted in a possible next round of measures. The EU has adopted 6 packages of sanctions against Russia and Belarus since the start of Moscow's invasion of Ukraine on February 24. But several sectors including gas remain largely untouched as EU governments avoid measures that could damage their own economies more than Russia's. Work will continue on sanctions, including to strengthen implementation and prevent circumvention, EU leaders will say at the end of their regular summit on June 23-24, according to the latest version of the draft conclusions dated June 20 and seen by Reuters.
Zinc prices jumped on Tuesday on concern over potential shortages resulting from falling inventories and possible reductions in smelter output because of high energy prices. 3-month zinc on the London Metal Exchange, LME, was up 3.2% to $3,628.50 a ton by 1400 GMT, having touched its lowest level in more than a month on Monday. LME zinc has shed 20% over the past 2 months along with losses in other industrial metals, hit by concern over a slowdown in top metals consumer China and potential global recession. We will now look at the top news in the agricultural sector. Malaysia will abolish subsidies for certain cooking oil products from July 1, its government announced on Tuesday, in what it said was a move to ensure domestic supply and stabilize prices. The world's second-largest palm oil producer will lift the subsidies for 2 kilograms, 4.4 pounds, 3 kilograms and 5 kilogram cooking oil bottles, which were introduced last year, but will continue subsidizing 1 kilogram packets. Malaysia will also lift ceiling prices for chicken and eggs from July, said Alexander Nantalinggi, the Minister of Domestic Trade and Consumer Affairs.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.